Hey, everybody. So this video is designed to break down the home buyer's loan estimate if you're buying or if you're refinancing. Now, the loan estimate replaced the good faith estimate in October of 2015. And really, it's just a portion of all of the disclosures that you're sent once we either go into contract, start the application, go into contract, or in the case of refinancing, we start the refinancing process. And the government, in all of its infinite wisdom, has put the onus on the lender to disclose all of the fees associated with buying a home. Now, I say it that way because a good portion of these are not our fees. They're third-party fees like title insurance, escrow insurance, recording fees, appraisal. But it's our job to report all of that to you. Now, the initial loan estimate that goes out to you, the operative word being estimate, is a collection of not only the lender fees, but also when we assign, whoever is the title and escrow company, they will send us their approximate fees. And when we get all of that, it comes to you in the form of a loan estimate. Now, in the case of when you're buying, the seller is the one who chooses the title and escrow company. So you'll see that the costs of title and escrow are not always the same. They can be slightly different from each other depending on who that title and escrow company is. There's also other things that are associated with the loan estimate that they call closing costs. Now, I don't agree that they are actual costs, and I'll explain why. To me, a closing cost, a cost is the cost of doing business, right? It's the things that you're going to have to pay because of this house. Whereas things like prepaid interest, prepaid insurance, prepaid taxes, those are the costs of actually owning the home after you've already bought it, right? You have to have insurance on your place. You have to pay county taxes, right? You have to pay property insurance. And all of that is lumped into this closing cost. So before we get too deep into this, let me go to the sample loan estimate that I have, and we'll go over it, okay? So in the disclosures, you'll see that there's probably over 60 pages usually, and the meat of the numbers start with something called the loan estimate. Now, you'll notice in this sample loan estimate, normally I would have your name and the property address, but I took that out because this is a sample from another client. But it'll have the date. It'll tell you whether it's a conventional loan or FHA. It tells you whether it's locked or not. It gives you an approximated interest rate. Now, I say that because if this was locked, that would not be approximate. The reason why this is the interest rate that was quoted is this is the interest rate that was used at the time to deliver this to the client. Right now, interest rates have been going down and this client has not wanted to lock. So the interest rate at the time when we drew these up was about 3.25%. But it has the loan amount, it has the principal and interest payment. But then when you go down here, it has the principal and interest payment. It also has the estimated escrows. Now, the escrows are things like property taxes and homeowners insurance. You see this? So 95% of my clients have that we call them escrow, but they're also called impounds. I have it myself. It's just when you write a check, you to whoever your lender is, in addition to your principal and interest, you're also including a portion of your property taxes and your insurance that is getting sent to the lender. So when your taxes are due and when your insurance is due, it's automatically paid for you. Now, you'll notice it says estimated closing cost $9,200 here. But if you look in the finer print, it says this includes $4,245 in loan costs, which is what I was talking about before. These are what I would consider to be a cost of doing the transaction, right? And it says $4,978 in other costs. Now, it's giving an estimated cash to close because this borrower is going to be rolling some of these costs into his loan, into their loan, I should say. Now, what on the second page here, it's going to do a deeper dive into these numbers. So I'm going to go to the second page, which is the closing cost details. I'm going to blow this up a little bit so people can see it. So in this particular case, these are the ones that these fees on this side are the ones that I explained. I agree. These are closing costs, right? This first part up here, these are the lender fees. And in this case, it's about $1,695. Now, sometimes, sometimes you will pay that. Sometimes you may not pay all of that because the lender can sometimes get you a credit to cover some of those fees. But regardless, in this particular case, this client has not locked. So disclosing these loan costs from the lender are appropriate. Now, if you go down here, you'll see this says services you cannot shop for. Okay, now these are things like the appraisal, the credit report, the flood certification. These are third-party services. You're not paying the lender these fees. The lender has an appraisal service that is doing the appraisal for you, and the appraisal fee of $515 and the admin fee of $120 will be going to that appraisal service. Now, once again, the lender can sometimes get credit to offset some of those costs, but nevertheless, we have not locked a rate in this case, so we have to disclose those. Now, here's where it gets kind of weird. This says services you can shop for. Now, these are all the different fees that we were talking about, like the document preparation fee, lender's title insurance, notary, settlement fee. Now, the reason why I say it's a little strange because most clients are not going to go out and find their own title and escrow company. In fact, if you're in escrow, if you're buying a home, the seller and the seller's agent are the one that is choosing that particular title and escrow company. So, I don't think, in fact, I can tell you, I think maybe once in my career have I seen a customer make a big enough stink that they have switched title and escrow companies. It doesn't really make a whole bunch of sense to do it because most of these title and escrow companies are kind of in line with each other. Can you save $10 here or $20 there? Sometimes you can, but usually an agent who's choosing a title and escrow company, that's somebody that they trust. They know that they're going to do the job, and they also know that they're being, the charges are fair. And the same thing goes for when the lender chooses your title and escrow company for refinance. Not only are we looking for great service, but we're also wanting to make sure that they have great fees, that they're not overcharging our clients. Okay. Now, when you add all of that up, right? The title and escrow and the lender fees, it comes up to about $4,200. Now, like I said, those are what I would agree with would be closing costs. The other fees over here on the other side, things like recording fees and taxes, you're not paying the lender that. That is, you are going to have to pay the recording fees to the county to record it. You have to pay a year's worth of homeowners insurance whenever you buy a house or you refinance. This gets sticky in some people's heads, especially when they already had homeowners insurance and they're doing a refinance. But you have to understand when you close this loan, you have to have a year's worth of insurance. Now, if you have an escrow account, an impound account, like what we were just talking about, and you're doing a refinance, you will get a refund from your old impound account that can offset, your property insurance premium and your taxes that you have, that have accumulated in that escrow account. But if you're buying your home and you're having impounds, you're going to have to pay for that homeowner's insurance in advance. You're also going to have prepaid interest. So this is, I'm recording this on May the 15th, 2020. So let's say that we were closing on June the 15th. Your first payment wouldn't be due until August the 1st. That doesn't mean that you get to live there for free for 45 days. It means that you're going to prepay interest from the 15th until the end of that month. And then when you make your payment in August, you're actually making July's payment. So with mortgages, you're always paying in the rears. With insurance and taxes, you're always paying in advance, okay? So when you add up these prepaids, and then also your things like your property tax. Now, this is kind of a whole nother area that I don't want to get too deep because it's going to make your head spin. But when you have impounds, the lender is going to require you to front load that impound account. Now, here's what that means. Taxes are due on April the 1st and November the 1st, okay? You're going to have at least 2 months worth of taxes buffered into that account because it's going to usually be about 45 days to 2 months before you make your first payment. So they always automatically make you put 2 months in there. If you're closing in the month of April, since the April taxes were just paid, they're going to add 2 plus 1. In May, 2 plus 2. In June, 2 plus 3. In July, 2 plus 4. So you would have, if you closed in July, 6 months worth of property taxes would be collected up front, okay? So when you break all of this down and you separate the actual fees from the things like the prepaids, that's where you come up with that figure of the $9,223. I hope I didn't make all of your guys' head spin on this. I know it can be a little confusing, but that's one of the reasons why I wanted to do the video, because you can watch it over and over again if you want, okay? Don't let it scare you. Sometimes, a lot of these fees wind up being less than what you're being shown here because lenders have a tendency to over-disclose. If for some reason, you have you order an appraisal and they're missing the detectors in the house. They might need to send that appraiser back, so you might be disclosed, some sort of a reinspection fee. But when you go sign your final docs, if you did not get a reinspection, you'll see that removed off of there. So your file is going to be looked at by a dozen people before it finally funds. And we have to make sure that every I is dotted, every T is crossed, and you don't pay one dime more than you absolutely have to. It's illegal for a lender to make a profit on any of these third-party services. So we're here to look out for you, okay? So with that said, I hope you found this useful. I know it was a little long-winded, but I wanted to be thorough. Please, if you're watching this on YouTube, subscribe to our Facebook page. Go to facebook.com. I'm sorry, if you're watching on YouTube, subscribe to our YouTube page. If you're watching this on Facebook, go to Facebook and like our page. It's facebook.com/Krevoy Team. And you can always call me at 949-735-4009. We're here to help you. Even if you already have a lender and you're not getting the straight scoop, if you want to talk to somebody and get some straight talk, don't hesitate to call us.